Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to This Week in Bitcoin. Today is September the 13th, 2019. Strong hand, be a unique beast, value your wealth in Bitcoin. Having hype, unconfiscatable, offended by selling, in motion. All right, best guests in the space, and of course, they're here today. Vortex and Jeet have returned, and this is the first time they've been on the show together because I bring you unique combos like this. Okay, we're going to jump right into the news of the day, and it was the news of yesterday. The European Central Bank on Thursday cut its interest rates 10 basis points to a record low of negative 0.5%, and will in November kick off a fresh round of stimulus. All right, what's this mean, G, for Bitcoin? Is the writing on the wall? The writing has been on the wall for a while. Should Europeans be getting into Bitcoin?
Well, everyone should be getting into Bitcoin, of course. But negative interest rates are really interesting because this is something that when you look on the TV and you have these anchors talking about it, or when you read some of the mainstream newspapers, they're kind of engaging in a process of trying to mainstream negative interest rates, or making it seem like this is something that's completely natural and expected. But when you kind of read between the lines of like the ECB's actual statements and consider like economic policy for all of history up until this point, it's obviously not very mainstream. And you're seeing some kind of cracks where you got like these big time kind of investors who show up on CNBC every week and they're like foaming at the mouth like Kramer in 2008, explaining why this is insane. So it's kind of fun to watch. We're not in a crisis or anything, and this isn't the thing that's going to pop the bubble, but it's just it's another example of central bank policy resulting in like kind of a misallocation in resources. And just to, I spent some time trying to think about like how I would explain it and if I actually understand negative interest rates. And I think the key thing that you guys need to understand, there's really two key points. So the first is like, why do negative interest rates not make sense? So generally, if I'm giving somebody a loan, I'm doing it as a basket of loans, and I'm charging a positive interest rate. Like, let's say something like 5%. And the idea is across a broad portfolio, I'm getting compensated 5% for the risk that the borrower defaults. And in fact, if you're charging somebody 1%, it's almost not worth it for you to take the risk of a default, right? So low interest rates or zero interest rates, you kind of don't want to make the loan. Negative interest rates, where you're giving somebody more money and you're not getting any money back, is just the most ridiculous thing. A rational actor would never make a loan for a negative interest rate. And then you go into, well, what's driving negative interest rates or negative yields? And it's like everything else. It's about price, and it's about supply and demand. And so the way to think about the supply and demand dynamics of these negative yielding debt in Europe is, the supply side is who's issuing this debt. Well, who issues really high quality debt in Europe? There's no European Central Bank issuing bonds. There is Germany, and they have a budget surplus. They're not going to be issuing any new debt. All the big like high quality corporate borrowers are 10 years into a bull cycle. They're probably over levered as is. They're not going to be raising any new debt. And all the countries in the periphery are not really in a position to be raising any new debt. So the supply of like high quality debt is pretty fixed. And then you go to the demand side, and what you realize is there are a ton of these buyers who are buying uneconomically. They're not buying for economic and rational reasons. There's like three major parties. So one is the pension funds. So pension funds, just like you and I have an asset allocation of like 60-40 stocks and bonds, they have their own asset allocations, which includes high quality corporate bonds and high quality sovereign grade bonds. And they haven't adjusted. For them, like, they need to invest according to what their asset allocation says. And if the bonds are yielding negative, the bonds are yielding negative. So they're uneconomically buying. And then you have the banks, which like what you or I would call saving or being conservative, keeping cash on the balance sheet. The ECB the European Central Bank regards as hoarding. They want to increase like bank loans and everything else. So if a bank has too much cash in the balance sheet, they start charging them fees. So the banks want to avoid those excess reserve fees. So they use that cash and they park it somewhere really safe, which is countries like Germany or high quality corporate debt. And then the third party is, of course, the ECB, which is now going to be just purchasing bonds in the open market, and they're not paying attention to price. So what's happening is interest rates, which are kind of like a benchmark for the rest of the economy, and me and you use to like refinance our home they all kind of interact with each other. And this fundamental piece of the economy is now like no longer a reliable signal of price, no longer a reliable signal of how much you should be charged, no longer a reliable signal of risk. And so what's happening is people like market participants aren't actually sure how to react. They have models that are based off correlation, but none of their historical models have negative interest. It's just such a wild and out of bounds thing. So that's kind of my take on it. Vortex, I don't know if you have any take that you care to share.
Yeah, so I mean, you pretty much kind of laid it out there, I think, for everybody right there. I mean, just to recap, I mean, the ECB is relaunching QE at 20 billion euros a month. I mean, just only 9 months after they ended their last run. And it's still, of course, negative interest rates. I think they're going to be 0.4 still. But at the same time, look, between Brexit, the trade wars, between U.S. and China, Europe is sort of feeling the pain now. All right, I mean, the whole world is sort of feeling the pain, but Europe is definitely feeling a squeeze here. This game will be ongoing until someone folds it, essentially, right? Because people are essentially, in order to buy these bonds, people either believe in the government or they believe in the central bank that's going to bail everybody out. And as he said, nobody knows, right? As Jeet said, nobody knows where this is going to go. We got the president of the United States tweeting to the central bank, lower rates. This is making everybody think that it's okay and that we have no inflation. This is definitely part of a longer term goal of banning cash, but that can be a different topic. Fundamentally here, the system is broken, as Jeet outlined here. This is like an entirely unprecedented situation. This has never happened in the history of global finance before, and really nobody knows what to expect. All we do know is that fundamentally at this point, the system is definitely broken. There is definitely things wrong with it that can't continue very much longer into the future. And so somebody's going to have to fold on their debt.
This is the thing. Both of you have said a key point. It is totally unprecedented. No one knows what it will bring. So there has to be a place of safety out there. And that's why I bring this topic up. How does Bitcoin fit into all of this, G?
Yeah, I think the person who I've started paying a lot of attention to in terms of understanding how debt cycles work, and particularly how like countries deal with their debt is Ray Dalio. He's got this great book called Big Debt Crises, and he's just done so much work. He's like a large hedge fund manager. He's one of the largest hedge fund managers in the world, and he's famous for being very rational and results oriented. And in this book, one of the things that, and he just kind of goes through case study after case study of how do countries react in different situations. One of the most striking parts of the book is there are so many countries where the central bankers aren't aware of what is the game theoretic best move to make. So these are the most educated people in that country. They're educated in the best schools and everything else. And even they aren't sure what the next move is. So historically, you see them making the wrong move all the time. When you bring up that Trump tweet, we should be devaluing our currency as well. So that's like a tool that people try to use, that if you devalue your currency, it makes your country more competitive. If somebody's doing a cost benefit analysis, like where do I want to start my factory up, they want to hire the cheapest employees, so they go to the country that has the devalued currency. But and it's like a tool to like spur economic growth that way. But all of this is it's taking place in the context of like a paradigm shift that's happening, where there is this old system, and it looks like there's some parts of this which are kind of unsustainable, and people are recognizing that it's unsustainable. So over the last 5 years, you've seen pension funds and these other people who have large endowments focusing, increasing their allocation to stuff like private equity, to stuff like venture capital, real assets. That's all stuff that isn't marked to market in the market every day, because they don't want exposure to that. They feel like that's kind of like it's too up in the air, and it's not something that is like kind of like reliable, and they don't want to get caught up in bubbles. So they're focused on things like water rights in California, right? That's like an asset class that they're thinking about because they want to focus on fundamentals. So all of the smart money is already making these moves to get down to like the real economy. And I think individual investors are eventually going to be making those moves too. When you look at what happened when they tried to raise rates, and the market kind of fell out from under everybody and everyone went into a panic. What's happening there is like what they teach you in school is the efficient market hypothesis, where everyone is like a super rational actor. I think you got to take that with a grain of salt, because you can see like what happens is nobody wants to be the person who's like the last person in musical chairs, right? So nothing is rational. When you think you're going to lose your entire investment, you sell at any price. And I think that's what you saw happening when they tried to raise rates. And the next time some event happens, that same rush for the exits is going to happen. And the thing that's kind of becoming increasingly clear is that these central banks, they're kind of running out of arrows in their quiver. Like how many more times can they lower the interest rate? At what point do they lower it to like -5% and people just give up as this doesn't make any sense anymore? They're doing the QE now, but how many more tools they have? They have like only 3 or 4 more tools. Once you get past QE and increasing QE even further, you can start helicoptering money into people's paychecks. But after that, the tools are fairly limited, and it seems like they don't understand when to press the brakes. They don't understand when you got to create a little bit of a buffer. And I think, one of the most interesting things that I saw out of this was the amount of leaks that came out of this meeting. So it looks like apparently like half of the cabinet for the ECB was just an open revolt. And we've never seen that kind of like, breaking of ranks before in the ECB. So when they were, bullying Greece in 2011, 2012, they were like unbreakable, right? And now what you're seeing is people are kind of having, they're feeling comfortable enough to voice different opinions. They don't feel that current status quo is sustainable.
All right, I want to go back to one thing that you said earlier, and the 3 major players in all of this. What was the 3 divisions? What was the first one again?
Pension funds and endowments.
Okay, you said their allocations are just locked in there. They have to get 45% bonds or something like that, right?
Yeah, and look, so one of the things is I don't have a breakdown of like who is buying what debt, but based off of the reading that I've done, I understand it's pension funds, and if they're like pension funds in the United States and everywhere else, they have an asset allocation, and they're not going to shift from that asset allocation.
When are they going to shift though? There's going to have to be a point when they wake up and shift into Bitcoin. That's what I'm saying. That's what I'm looking at here.
Yeah. So look, I think so first of all, there's 2 things. So first of all, these people who are making decisions at pensions and endowments are like the most conservative people you can imagine. So to get hired for that job and to kind of keep your job and to have a career down the line, you don't necessarily want to be the first person like, rushing open the gates to try to jump into the risky asset classes. So this is a naturally very conservative group. However, we've already seen the first signs of the kind of rush to Bitcoin. So David Swenson, who is the kind of thought leader in the space, he's the person who made Yale's endowment from like really below average to like literally the kind of endowment that sovereign nations and sovereign wealth funds look to him for advice. He's invested in at least one of A16Z's crypto funds, and I think at least one other crypto hedge fund. So through that, he's starting to get exposure to Bitcoin. And I think some of these other pension funds are now starting to dip their toes, either through existing, like A16Z, for example. Andreessen Horowitz is like the premier venture capital firm. So the top tier pensions that are in A16Z now and have gotten an allocation in their crypto fund are the top tier endowments. So if they get a good return out of that fund and they start seeing those results early on, they're going to look for other players. And then other pension funds who aren't able to allocate to Andreessen are going to be looking around for other top tier funds that they can invest in. And I think it's going to come in through the funds first, and then it's going to come into direct allocations to Bitcoin. Right now, I think in order to increase adoption, a lot of these hedge funds are framing things in terms of traditional investments where everything is already like vetted and legitimate and past the SEC. In this case, these investments are pretty, they're pretty untested. So like outside of Bitcoin and 1 or 2 others that you could say have been, thoroughly vetted for security and everything else, there's very few of these investments that you would feel comfortable recommending to an endowment. And again, the people there are very conservative, so they're not going to be the first person to make a jump. But I think as soon as Coinbase IPOs and you see some of those returns showing up in existing pension funds, there's just going to be a rush towards getting more exposure to crypto.
Very interesting. Coinbase name drop there. We'll get to them in a second. Pound that like button, people. All right, Vortex, let's go back to you real quick. Any more thoughts on how this all ties into to Bitcoin? You mentioned Trump specifically and negative interest rates that we might end up with here.
Yeah, it's pretty crazy because I mean, even Jeet said like the most educated people, have no idea what's going on right now. They have no idea what to expect and no idea actually what is even going on. I mean, if you look at some of the biggest economists, some of the biggest people in finance, they really just don't have any idea what's going on and what to expect. So I think that's really important to understand, and especially their understanding of Bitcoin is going to be limited as well. There is Simon. For example, Simon Dixon is one of the people I respect most in traditional finance, and he straight up tells you in his videos that these people simply don't know what's actually going on. Even the people at the ECB, the people in these meetings, sometimes don't understand what's going on. So it's just important to understand that. Look, the big people, the big guys, the governments and central banks, they do not have it all figured out right now. We are in unprecedented times, and nobody really knows what's going to happen in this ongoing global paradigm shift that we're experiencing right now. So I think, but I do think some people are beginning to recognize, like G also said, some people are really beginning to recognize some of the parts of the current financial system are unsustainable, especially like G said, like when do people actually give up? Is it 3%? Is it 4%? Is it 5%? I don't know, but with each percent, more and more people start to see the cracks. And I think that's just really important because eventually the jig will be up. And we have so many, like G said, also, there's just not a whole lot of things for institutional investors to really sink their teeth into right now. I mean, because people are scared, and we have people like VanEck, SolidX, right? They're going to do pilots a bit of a Bitcoin offering called the BTF, right, which is not an ETF directly for retail investors, but a BTF, which is more for the institutional investors. It's called a broker traded fund, and I think they're doing that right just to prove that an ETF product is viable, that they can handle this stuff, right? That this is actually possible, that people want this, that there is demand. So we see steps like this moving forward, little steps like this, and of course, Anthony Pompliano has a fund, I believe, maybe G, the name of it, that recently had some pension funds invest in it as well.
Morgan Creek Asset.
Yeah, Morgan Creek.
Morgan Creek, something like that.
Yep. So these little steps, we see them being made little bit by little bit. And with each one, more people understand and more people are recognizing the Bitcoin name as a brand, as all sorts of things. And really, most importantly, we're starting to see, or almost most importantly, we're starting to see Bitcoin being talked about as a safe haven, right, on CNBC and by all these huge economists, when it's only 10 years into the game. When Bitcoin is only 10 years old, we're already talking about it as a possible safe haven. So I think people really are starting to get it a little bit where they need to get it. And we just have to wait and see what happens.
All right, now we're talking about Europe. Let's move on to something else that's going on in Europe, and I'll start with Vortex on this. France will halt the development of Facebook's planned Libra cryptocurrency in Europe because it threatens the monetary sovereignty of governments. Well, that's what France says. Do you think France will be able to do that? Your thoughts on that, Vortex?
Yeah, so I think this just echoes back. This is beautiful for me. I mean, everything about Libra has been just beautiful for me because it's just one thing after another proving why Bitcoin, why we need Bitcoin, why Bitcoin exists, why Bitcoin still exists, one thing after another. And of course, one of these things is permissionless innovation, right? So there is nobody that can technically stop Bitcoin. There is, at least as we understand it today, there's nobody that can go out there and just say, get Bitcoin on the phone and be like, look, guys, look, we don't like what you're doing. We're going to have to kick you out of our country. There's no ability for a country to do that, but there is an ability to stop Libra, right? There is an ability to say, no, you know what? We're not gonna have Libra here. They can do that very easily. But that's the whole thing that really Bitcoin brings to the table here, is this permissionless innovation, is this open, borderless, decentralized, permissionless innovation type of network here that anybody can participate in. So for me, this is just highlighting more and more of why Bitcoin is important, and maybe even why altcoins aren't so important. Because guys, look, if Libra can be kicked out of a country, what do you think they can do to some altcoin, like Ethereum, or some other altcoin like Tezos, or whatever, insert a name that you want to pick, right? Doesn't matter. They can absolutely stop that, because most of these altcoins are in fact centralized. Bitcoin being the only actual decentralized public blockchain at scale, these other coins can absolutely be thwarted and one day France can wake up and be like, you know what, we're not a big fan of EOS. We're not gonna let that we're not going to let our businesses participate in that particular blockchain. And so this is what's possible with these types of centralized solutions. And I think it's very, very just, again, highlighting the importance of Bitcoin and why Bitcoin can't be stopped.
Do you think, though, that that this is just a threat to Facebook? Maybe they want a little compensation or some compromise from Facebook that they'll be able to get through? Because I personally
it's all a game, right?
Yeah.
It's all a game, right, Adam? I mean, this is all a game. I mean, we saw what happened to Julian Assange, right? When Ecuador gave up Julian Assange in exchange for a $4 billion stimulus, right, from the central bank. So it's all a game. We see what's going on, and it's just a matter of, who's going to still want to play their game and who's going to want to finally just give up and say, you know what, we're going to go play this other game over here called Bitcoin, where it's a lot easier for the average person to get into, where we can have predictable monetary policy. I think it highlights that.
All right, G, your thoughts on France and Facebook?
Yeah, I think they were quoting the French finance minister, and the thing that really stuck out to me was, I mean, he just straight up said we're not going to cede our monetary national sovereignty to like one entity that just happens to have 2 billion users. And it's kind of interesting because the way that he frames it is that it's like confrontational. So I think that Libra may have made a mistake, and since they are centralized, the benefit of that should be that they're hiring a ton of like marketing and regulatory people, and then visiting every single major country, and then speaking with those people ahead of time, making them aware before any public announcements. Instead, you hear, well, XYZ $1 billion U.S. American tech company, Facebook, which is responsible for data privacy issues, which Europeans are very sensitive about, is launching a currency, and it's going to take over every other currency. So you can imagine the French finance minister is just sitting there like, not on my watch. So it's kind of a, in addition to obviously having like a ton of their citizens like switching to Libra in a crisis, that's like a risk for France, obviously, and for all the other EU countries. But I think it's more like, when somebody is trying to establish a government, like there are certain sources of authority. Minting your own coin is literally like the most old school way you can imagine to establish that you're like a sovereign entity and you're a sovereign country. So it's like they're going to France and taking away or competing with them on their own soil. So I can imagine the French finance minister is probably feeling a little bit nationalistic and just laid into them that way.
Yeah. It's a brave new world we're entering, where corporations will be able to compete on the turf of these countries with what they used to have a monopoly on. So I can see. Oh yes.
What's crazy, Adam, is that like Facebook was supposed to thwart this whole problem, right, by having a basket of currencies, so everybody can play. Everybody's a part of Facebook, and of course that had the absolute opposite effect, because even if they were to go to just with the US dollar that was backing the thing, it would still not get any more support. So they tried to get a basket of currencies to get more support, and that still didn't help, because people, I think, are wise to the fact that what you said, a sovereign entity is recognizable most by their currency, right?
Yeah. They just added the Singapore dollar to their basket, I think I read. Who knows what gimmick they'll come up with next, or if they'll be able to bribe France. We shall see. I still think that if it does get off the ground, I think it'll be good for Bitcoin, because it'll get people in the cryptocurrency, and then some of them will find out what the real thing is. Now,
Adam, I was just going to say, here's the other take on this. Facebook is trying to be like the next generation of Tether, right?
Yes.
So Tether is for large OTC traders, going in between exchanges and in between each other and going back and forth between countries. Libra is basically saying we want to do Tether, but we want to do it at a smaller scale and across even more people, so that the governments can't track it. So that just feels pretty controversial. And like you pointed out, it's not permissionless. If you're playing the game where you have to, if you're playing the game of dealing with governments, then you should do it the right way. Otherwise, they're kind of making promises to their customers that they're probably not going to be able to keep.
All right, let's move on to another controversial entity, Coinbase. Coinbase may soon get into the business of initial exchange offerings. Vortex.
Yeah, it's kind of crazy. I mean, so look, I think everybody's aware at this point of the failure of ICOs. That was Ethereum's main use case at the time. They keep changing their use case, of course, what it's supposed to be. But for 2017, it was the ICO machine. And I think everybody's aware at this point now that ICOs was a bubble. It was absolutely a bubble. There was a whole lot of projects that did a whole lot of harm to the space. You know, over 99% of them failed, and over 99% of them were scams. And so we have actual evidence to know that that particular idea of investment is not such a great idea. But then somebody was like, you know what? Binance was like, you know, we're gonna do ICOs again, but this time it'll be through us, and it'll be all fine. Everybody will be okay. Everybody can participate, and it'll be fine. What happened there, of course? Still more scammy projects. I mean, the scammiest of all projects you can think of has now gone through Binance in an IEO, and we see the same result. Almost all of them are scams. Almost all of them don't do anything. Very, very, very few are actual honest technology trying to contribute to the space. So most of it is just pumped and dumped. If you look back at the stats of the ICOs, you can see that all of them are underwater, and almost all of them have spent like 80% of their balance sheet. Like it's pretty crazy. Just trying to stay afloat, trying to survive. So I don't expect these IEOs to be a whole lot different. I think everybody at some point, every exchange is going to launch an IEO. It's just, again, more profit for them until regulations catch up once again and stop them from doing that. So it takes a couple of years. People are going to people are going to find new opportunities. That's not going to stop, especially now in this permissionless kind of space that is crypto. You really can just sort of start doing all sorts of things. I mean, if you look at what Binance did, they just launched a token, and then they moved to this country, and then moved to this country, and then they launched IEOs, and now they're launching an exchange in the US in just the end of September. So it's you can in this type of world, people are going to absolutely try to move fast and break things. And that's, of course, a big difference between sort of the Bitcoin ecosystem and the rest of the ecosystem. But the rest of the ecosystem absolutely all day long will try to move fast and break things, try to find that opportunity, and until regulation catches up. So this is just, I think, another example of that. And I would say be, again, very wary, guys, of these IEOs. They're really no different than the ICOs. And we see diminishing returns on them already. The IEOs are already starting to have diminishing returns. So the IEO bubble might be even drying up faster than the ICO bubble.
But what's this say about Coinbase that they want to diversify into this thing of all things?
Yeah, so I think it's split the company in half really at this point. They recently in the last year or two made this huge company-wide decision to make altcoins a huge focus. They really wanted to diversify into all these different altcoin types of solutions and things for customers. And what we've seen again is, there is no liquidity on these tokens and on these coins. Coinbase is supporting tokens that literally have $2,000 of trading volume in 24 hours. Just complete nonsense. Just unethical to the point of to the point of it being unethical that there's so low liquidity on these tokens. And so the Coinbase, I think, is going to continue down this particular road for at least another 6 months to a year, as that is what they've really been going headstrong in for the past couple of years. But all I think of the smart people of Coinbase have left long ago, long before this new business strategy of diversification into altcoins. We've seen what happens to the altcoins. They definitely over time continue to lose value when it comes to Bitcoin, when it's measured in Bitcoin. So really, Coinbase is going to still go down this road. They're going to lose money. They're going to lose their customers' money, just like they have been for the past couple of years with their business decisions. This is going to be no different. I mean, I think it's well aware at this point that Coinbase is the punching bag of the space. They've made just incorrect step, wrong step after wrong step after wrong step. And this is just yet another, I think, step in the wrong direction for Coinbase.
Gee, with all this being said, how can they pull off an IPO? What do you think about them going in this direction?
It's going to be interesting to see if they can pull off an IPO in the altcoin bear market. Like that would be funny, but I don't think they're going to be that stupid. I think they're going to wait for Bitcoin, to be at least 50K, so jumpstart another altcoin market, and they'll probably launch around then. But again, guys, these altcoin markets, if you look over time, they just continuously crash back down to this overall medium, and that line, guys, is going to be broken one day. One day when the world finally figures out that most of the stuff isn't viable for consumer grade, for institutional grade, for any grade of consumer or of customer, I think that the world is going to wake up. It's going to take some time, but eventually the world's going to wake up that most of these altcoins just aren't worth billions and billions of dollars, especially when they have less than tens of thousands of dollars in 24-hour trading volume.
Yeah, that's the key point that I think a lot of people miss. Like, when you think about like fundamental value and what is actually driving, it's easy to talk and say that, hey, you guys have probably seen those charts where it compares the features of the different coins. But the way to think about like something that can compete with currencies and be a store of value is not like simply copying and pasting the code. It's one, you got to either write something that's original, like Satoshi Nakamoto did. And then he's able to capture the bulk of attention. And the people that are writing on Bitcoin aren't necessarily like writing code for economic reasons. Some of these people are like, they're motivated. They're intrinsically motivated by like the fun of doing it and the joy that they get from working on like the best system. Like a lot of other open source software, like there'll be billions of users or hundreds of millions of users. And, it turns out there's like 2 guys and a cat that are maintaining the whole system. But those guys are obsessed with that system and they're never going to quit. So those, hundreds of millions of users could be there or they could not be there. The developers will still be there. And I think around Bitcoin, there's coalesced this group of developers, this group of hodlers, this group of people who are going to be putting out content. Like I can imagine Vortex putting out content no matter what, right? I don't think he's going to just stop if the Bitcoin price goes to 1,000. It's going to be game on even more. I'll join you.
That's it. I'm done. I'm out.
So that's the type of thing when you get people doing stuff for uneconomic reasons and from a place that doesn't come from an expected value calculation, but it comes from like, this is the right thing to do, or this is just what I'm interested in doing. Like that's when you get a beautiful system. Like that's how you get something like Wikipedia going, when you just get people who are all kind of coordinating together. And so that's why I love everything that you guys are saying about altcoins, because as much as like I like some of the people who are doing these altcoins and I like the ideas of some of the projects, the problem is that they're not very serious about it because they're always launching to make, you can just see they always embed themselves a pre-mine or some kind of feature so that they get paid. And like what they're doing is taking their chips off the table. And that's just a signal for you as an investor in the crypto space that they may not be as serious as you think. Sorry, I was going to jump into Coinbase.
Yeah, please, yes.
Yeah. So the only other thing I would say about Coinbase is I think a couple of shows ago, I brought up Coinbase versus Binance and how this was going to be like the, Tyson versus Ali type of situation. Binance has rolled up liquidity outside of the United States. They have every single altcoin, and they have all these like cool little features that they're adding all the time. And Coinbase has the U.S. market. As a reminder, the U.S. market is worth far more. Like your college student in the United States with their lunch money has more money sometimes than somebody who could be like, like a post-college employee in other countries. So each customer in the United States is worth so much more than customers in the other areas. But because Binance has a tight feedback loop with all their customers, and their customers are constantly giving them feedback, and they're figuring out problems for their customers, they have all these cool features and stuff that people love. So the IEOs, like I agree with you. I have not invested in any of these IEOs, but their Launchpad, which is like they're trying to make like a Y Combinator for crypto. They're attracting all the smart teams in Asia to come and work for them. And then they're attracting all of the attention from people who are interested in investing. And so they're just kind of doing the right thing. So I don't agree with like, I wouldn't invest, but they're doing what is correct to do from a business perspective to gain attention and to like win the game. And the game is ultimately winning the US market because it's the most valuable. So, now they've cut out all the US users. They're launching a new exchange in the US. And so you can imagine the people in Coinbase who are thinking about like, what is their differentiator? Historically, it's been they're the only reliable exchange in the United States. Well, guess what? For the last 2 years, anybody who's wanted to invest in altcoins, they've generally used Binance. They're familiar with it, and they kind of trust it. Maybe not to the point of a Coinbase, but in general, a lot of folks trust Binance and CZ. They know that like he just kind of has like a very positive customer service mindset where they're like refunding money all the time if they make mistakes and all that stuff. So now Coinbase is probably trying to fill the gaps of where they can't compete with Binance effectively. One, that's altcoins. So they added Dash recently. I doubt that they would have added Dash if Binance wasn't entering the United States, and along with some of the other ones that they've added. And then it looks like they're also thinking about getting into security token offerings and IEOs, and they've bought some of these broker-dealers, the people who have broker-dealer licenses, which allows them to sell securities. They're just kind of positioning themselves so that 6 months from now, they're not going to be caught off guard when Binance starts doing more IEOs, but they do their first IEO in the United States, for example. So I think that they need to fill in the gaps so that when I'm making a choice between where do I, park my money and all my trading, like where do I want to trade? Do I want to trade in Coinbase where I can trade like 4 altcoins, 5 altcoins? Or do I want to go to Binance where I have like the entire gamut of altcoins?
Oh yes, continue. Sorry.
Yeah, I was going to say, well, so like, because we don't think in those terms, right? I mean, we're pretty conservative guys investing in Bitcoin, and we know that we're going to win long term. But day to day, the traders, I think, are what makes a lot of the profit for these guys, for the exchanges. So they're catering to the traders, and I think that winning over the traders and getting the correct mindset is what's going to win. And there's some interesting moves that Kraken has made as well in this space to try to compete. They've got I think it's called Coin Switch, or let's see what it's called. Crypto Watch, it's called. So there's a it's kind of like a dashboard or an overlay or a Bloomberg terminal for trading IEOs. There's this service called CoinFox. That's KoinFox, and this is launched by a couple of dudes sitting in India. They want to trade. They want to trade altcoins. So they started giving tools to normal people so that they could, get into the IEOs at the right price in Binance. And so people love that. And so they started teaming up with Binance and, they were launching events together. And I think that Kraken, seeing that, is like, how do we get involved in that? And they've launched a competing product now. It looks like Crypto Watch. And also Binance launched futures. Now Kraken is launching futures. Like, they're all trying to like fill in the gap of what they're missing somehow. So that's the kind of big theme that I see.
Oh, wow. You impulsive traders, you're fueling a war between these, these organizations. Strong hand, you non-traders. Don't be tempted by all these fancy K words or whatever that was. It starts with a K, but it was,
I won't say it again. I don't want anyone to.
It was spelled in such a trendy.
It's spelled SQUARECA.
Well, we're on the topic of altcoins. Ethereum's been on, both of you guys tweet about Ethereum sometimes. Vortex, what's the latest?
What's the latest with Ethereum? There's still, I have no idea. All I know is that they're still working on Ethereum 2.0. They're supposed to launch that version in January, but I think that just recently got delayed as well. I don't even think they have a date on that actually at this point, but I am the wrong guy to ask about Ethereum. I can tell you that it's been pretty fun watching Eric Wall try to sync a Geth node. That's been pretty hilarious. Was it Geth or Parity? I forget what he's running now. Oh, no, it's Parity. He was Eric Wall was trying to sync a Parity node. It took him 25 days and several crashes and several freezes before he actually got it. But he actually got it synced as of today. The journey is now over. He actually got it synced 25 days. It was one heck of a journey. But again, guys, I mean, this is where Ethereum is right now in 2019. Well, how long is it going to take to sync a node in just 5 years from now? Maybe even just 3 years from now, right? When they have 2-minute blocks or something ridiculous. It's absolutely insanity over there. So of course they're trying to restart this thing from scratch and Ethereum 2.0. And of course we have the leader of Ethereum, Vitalik, even saying things like, Ethereum 1.0. Now, there was never any flipping. There was never any plan to flip in Bitcoin. There was never any plan to be a world computer. No, it was just a scrappy little project made by a couple of different developers. And it's like, guys, they certainly didn't market it like that for the past few years. So that was pretty interesting to have a quote like that from Vitalik. But it's just these altcoins, they just fuel the speculation. This is why all these exchanges exist. This is why all these IEOs and ICOs exist, the traders and the speculation. And, and then that's fine. That's always going to be a part of markets, and especially a part of Bitcoin, because that is, what drove Bitcoin a lot and still drives Bitcoin in these days. Even though we have actual use case scenarios, we have Bitcoin ATMs everywhere. We have Lightning Network. We have people actually using this stuff for buying things with BTC Pay Server and things like that. So, and of course, we have the financialization of Bitcoin with products on Wall Street, like these options and futures and things that Bakkt is launching. So, it's you really have to compare Bitcoin and Ethereum every once in a while just to sort of keep your sanity because people pump Ethereum still to this day like crazy. There are people on Twitter out there that are tweeting almost every day that Ethereum is money, that Ethereum is digital gold. At this point, I think Ethereum has tried to take every single one of Bitcoin's memes. I think the latest one is stacking GWEI is like stacking sats. one of their stable coins, right? It's like stacking sats. Sure, guys, stacking stable coins definitely like stacking sats all day long. Absolutely. So it not to be honest, again, I'm not going to comment exactly what's going on over there because again, Bitcoin just takes so much of my time. There's so many things happening in Bitcoin that it's really hard for me to pay attention to other chains. But definitely, this stuff comes across my Twitter sphere and my timeline, and so I definitely tweet some of these things, like somebody actually attempting to try to sync an Ethereum node. That adventure was very, very, very interesting, and I encourage everybody to check out that tweet and find out what it's actually like to work on Ethereum when you're trying to work on Ethereum without any other central players in there, without any other third parties, without any other person in your way, and it's really difficult at this point. It's near impossible, and I think in the next couple of years it's going to be really, really impossible. Which is why, of course, they're starting this Ethereum 2.0 type of thing. But guys, if I tweeted this out, I'm like, have any one of your engineers in one of your companies, if anybody is part of a company, have any one of your engineers take a look at any one of these roadmaps and any one of these design documents. They're going to fall over laughing. It's absolute absurdity, some of the things that they're trying to do. And I'm all for experimentation, and that's great. There's going to be all sorts of interesting things that comes out of Ethereum at some point. But yeah, it really, for the most part, I can't pay a whole lot of attention to it.
All right, I knew you'd have something to say about it. Is it again, follow both these dudes, Jeet and Vortex. They are linked to below. Jeet, your thoughts on Ethereum? They do have a lot of developers. They do have conferences. There's a big one going on in Tel Aviv soon. People are building stuff on it. What's going on?
Yeah, I think so let me comment first on something that Vortex said, which is incredibly important. So, there is a significant amount of sneering and kind of looking down on statements like sync your own full node, or, anytime somebody brings that up, there's always somebody who's like a smart aleck, they're probably like a journalist or they have a blue check mark, and they'll explain why. Well, what are you going to do, if the government seizes your Bitcoin full node? The world never, nothing is ever that extreme. All that matters is that I can buy a Raspberry Pi for $35 and I can sync my full node very quickly and easily. And it's not very complicated. I've done it a couple of times now and explained to people how to do it. It's not like, it is, it's not something that my grandma could do, but it is something that any reasonable, college educated or high school educated person can sync up. And what that does is it allows whoever has that node to validate the state of the blockchain. So if we have 1 million people who are validating and can validate the transactions that are coming into them, that's 1 million people who agree on the state of what's going on. Whereas for Ethereum, if you have only 6 companies that can run a node, and I'm exaggerating, I know there's probably more nodes than 6, but it reduces.
There's probably 12.
Yeah, it reduces the validator set. So it means that there's less people who are doing the validating. So then all the other million users of Ethereum would be depending on those 6 parties, and that's a trusted third party, which Nick Szabo writes about, and it's exact situation that EOS was in China. When you have 12 people in a room, it's very easy for them to start creating a cartel and discriminating against the normal users because they have all the power to validate, and the obstacles are too high for normal people to set up their own node. So that is like a superpower that Bitcoin has, is that they just literally, your spam filter in Bitcoin needs to be through the roof, because you don't want to be the person who's adding on junk, and you don't want to fall prey to whatever junk science people are throwing out there. Bitcoin is fine as it is, and anybody who's trying to add on different features, they're probably a scammer, and you should be extremely suspect. So that was one thing. The second thing was the memes. So the Ethereum people have really ramped up their meme game, and I kind of admire it because Bitstein, it's I don't know how you spell it. He has this.
Michael Goldstein is his name.
Michael Goldstein. Okay, there you go. He's one of the guys from the Nakamoto Institute, right? So they had a talk in a conference recently. If you just type in Michael Goldstein meme or something about how debate should happen, and it's kind of funny because the stuff that he talks about, the Ethereum people have actually started to adopt, and they have much stronger kind of memes and arguments, and they're kind of playing around now. So instead of being triggered by any time somebody brings up Ethereum's technical defects, they kind of turn it into a positive, just like Bitcoin people do when you explain why is there no adoption or something, right? It's well, you just got to stay super positive until that adoption happens. And so they're trying to kind of play the same game. So they're essentially copying and pasting a lot of the memes that Bitcoin people have used into Ethereum. And so it's getting harder to kind of pierce through that. And then that being said, in terms of what's happening on Ethereum, there is like a lot of activity. The base layer it's still not clear how 2.0 is going to happen, so it's extremely unstable. But I think a lot of what's happening is the DeFi, the decentralized finance. People are launching different things, and we'll see where it goes. Like a lot of it seems like kind of interesting, but the problem is that it's like there's too many layers of complexity, and there's too many layers of things that were built in a week, and it's not clear that they're going to last the kind of test of time. So there's a lot of experimentation going on. Hopefully something successful happens with it. I root for DAI, MakerDAO, their stablecoin DAI. It seems like they have the potential to like go to a place that doesn't have crypto adoption and they don't have other options to try it, but they haven't succeeded yet. So I wouldn't recommend buying anything other than Bitcoin, but it's kind of fun to watch people do these experiments. I think Ethereum people are trying. The developers are trying. The people who are like in the trenches, so to speak, are definitely trying. But if you built on an unstable base layer, like it's not going to amount to much. So hopefully we'll just be prepared when they want to start building on Bitcoin.
Vortex, 70% Bitcoin dominance. You mentioned earlier that eventually the altcoins are just gonna pop downward. Do you see the dominance increasing soon?
So I really hate this freaking metric. I really, really do. Because obviously what we're trying to say here is that Bitcoin should be measured against all of these other chains, whether they're tokens, whether they're not tokens, whether they're stable coins, whether they use proof of work or not, whether they're proof of stake. And of course, that to me is just kind of insanity. But of course, the metric is still does get used because we need some kind of measurement to measure Bitcoin against everything else. And so this is what is used. And it has reached 70% dominance at this point. Again, many people have predicted that was going to happen eventually. Over time, it's really, in my opinion, just a matter of time. So because remember, everything sort of history rhymes, that all the stuff sort of plays out like over and over again. So we're having some of these I guess you call them blockchain wars at this point. Really, Bitcoin won a long time ago, but people are still trying to take over Bitcoin take Bitcoin spot, right? And so they're still trying to come up with these different ideas, come up with these different things, and see if they can take over Bitcoin. But really, what we've seen time and time again is that their value continues to be lost against Bitcoin. And so, really, at this point, the alts are never going to go away completely. Of course, I mean, you can't just tell people to stop programming. That's not gonna happen. And of course, sometimes I catch flack for telling people that I'm not a quote unquote Bitcoin maximalist because I do believe in experimentation. I do believe that not every single person in the planet is a scammer, just most. And so that there are some people out there that do want to do some good and do want to do some experimentation and simply don't understand that the intricacies of Bitcoin and Ethereum and which one they should work on. Because guys, this is new stuff. This is not easy. This is new. This has only been around for a few years. And of course, the world has really only heard about Bitcoin since 2013. Really, that's when the world sort of found out about it, when it had that big boom up to 1,200. And so I think that, like I said, I think over time, people are going to realize this more and more. And again, this stuff really repeats. If you look back into the 90s, you can see these protocol wars, TCP/IP versus other protocols. There was a huge suite of protocols that the teleco companies tried to come up with and compete with TCP/IP, compete with these open source protocols. But of course, the open source went out because it was just more accessible. Anybody and everybody anywhere could build on it. And that's what's important, this permissionless innovation, this innovation at the edges. And this is how you gain network effects. This is how you create networks that have network effects that can just at some point become insurmountable. For example, like TCP/IP itself. I mean, it was at version 4 for so many years, and even to this day, it's mostly version 4 IPs out there. TCP/IP version 6 is very seldomly used, and they just started really building it into the operating systems, the server operating systems, in the past couple of years. So this takes time. Network effects are real, and they do take time. They do become at some point impossible to surmount, really. So, and that's where the theory comes comes in about, Bitcoin, the ossification effect of Bitcoin at some point not being able to really modify layer one. I don't know how much I believe in that fully, because we do have things like soft forks, and we do have some pretty clever developers. But at the same time, this stuff has really repeated over and over again. And I think the market continues to choose the open source, the permissionless way. And at this point, Bitcoin is the only game in town. Bitcoin is the only permissionless, decentralized blockchain at scale. And so it's only a matter of time before more and more people figure this out.
All right, Jeet.
Yeah, I'm all for soft forks and people signaling, what the right thing to do is. I think the argument, I like to emphasize the scammer part, because I found it really helpful. Like, if you go into investing with the mindset that you're mostly looking at scams, it's really helpful because it helps you like dig a little bit deeper to understand like, okay, where is the scammy part? Like that they're trying to get one over on you. And so it's helpful to, when you're thinking adversarially about it, to think about how they're going to try to potentially get one over on you. So one of the things, for example, that I think is kind of controversial is the idea that you increase Bitcoin privacy on the base layer. So not through mixers, but through whatever technology they're planning to use. And it's kind of funny because when you look at the parallel in Zcash, you run into these situations where Zcash has the best developers in ZK snarks. It's, the shielded addresses are actually shielded. Nobody's broken that yet. But it's not, there's a section of Zcash which is not transparent. So it's not clear how many Zcash are in that shielded section. And then a few months ago, I think there was this error or this flaw where it turns out that somebody who found that out could have exploited it to create an unlimited amount of Zcash in the shielded section. So nobody else would have been able to validate the total supply of Zcash. In Bitcoin, anybody can validate it because it's all visible. And the risk is that if you start obscuring it too much to the point that it's hard to validate, then you run into the problem that Zcash has where there was literally like 2 engineers who caught it. And so you need to not only know programming, not only know specific blockchains, you need to be very, very familiar with ZK snarks and then very, very familiar with this particular code base. So these types of attack vectors do exist. Somebody could have exploited it, and the only people who caught it was one of 2 people. And you know what? These are nice people. They're very smart people, and I trust them. But I don't trust them that much. I don't trust them to the point that I'm gonna invest my life savings, or I'm gonna recommend other people invest their life savings or use it as a base layer if these fundamental types of errors pop up, and the only people who can validate it are people who live in the United States, and we know their names and addresses and everything else. And so some third party could go and just bribe them, quite simply, right? So all these attack vectors exist when you have that obscurity. And then the thing that I like about Bitcoin, to some extent, is that you just don't have that. It's pretty chill. Like, I don't need to think about it. With Zcash, they're making, in addition to this shielded stuff, they're also doing these hard forks all the time. Same thing with Monero. Monero is like a top tier next to Bitcoin, right? But if they're hard forking every 6 months, that's every single time they hard fork, that's another time that you as an investor need to be paying attention, where somebody could be, potentially introducing flaws into the protocol that they can later take advantage of, or where the developers could be introducing a type of algorithm that they've already got the ASICs ready for. They could have planned this 2 years in advance, right? You just never know how far in advance or what types of games or what type of level you're playing at in blockchain or in Bitcoin. So that's kind of my strong form argument for no scammers or no scams, or everything is a scam.
All right. We are at the end of the show, basically. So it's time to wrap it up and bring up the subject matters that you want to bring up. Anything that was forgotten, anything you want to add. It's been a blast. Vortex, what do you have?
Well, there's not a whole lot of stuff. It was actually a relatively slow week. But I think it was some awesome stuff happening in the privacy space in Bitcoin. Really, we're in an absolute bull market for privacy when it comes to Bitcoin. There's so much technology that is actually being worked on right now, and again, not so much on the base layer Monero style, as G just said, but really, we're at the transaction layer is where a lot of this stuff is happening. And so we have things like the Samurai Whirlpools. They're just continuously reaching new all-time highs of cycles every single month, steadily month over month. I think they hit over 380 cycles just in the first 12 days for the month of September. So a lot more people using that. That's going to be really great. More people running Whirlpool servers. So that's really great. I'm going to see more and more of that. We need to run Whirlpool servers. We need to run eCash servers and Chaumium eCash servers, and we will be, and Lightning nodes. And I think we can scale Bitcoin to the planet privately. So that's going to be really cool. And then we got the new Wasabi wallet, the release of version 1.17. They just released a brand new version. They continue to optimize the wallet over there and optimize everything over there about that wallet, about their coin joins that they have over there. So that's the Wasabi wallet is the wallet that allows you to do coin joins. Again, more privacy at the transactional layer. They have added a couple things like manual transaction fee settings and some Bitcoin URL support, which is interesting. That's pretty cool to see. And so as a web developer, that's what's interesting to me. And then of course, and you have Trezor introducing their Shamir backups, which is pretty awesome based on Shamir's secret sharing, which I think is pretty interesting because that allows you to really securely split up your seed, which is pretty interesting because you could do like a 2 of 3 on your seed. But if somebody gets that one, they're still screwed. They can't do anything. Where if you just like maybe chop up your seed into like 3 pieces, like maybe somebody can guess the final words, right? But when you're doing when you're doing a Shamir actual secret sharing, you have to have at least 2 of those 3. You can't just have one. So that's pretty interesting to see. Again, a practical example of this would be, a 2 of 3 sort of backup of your list. So I think more and more privacy stuff is really happening in Bitcoin. I'm really excited about that. I'm trying to pay attention to it all, but there's just so much. And then finally, there is a big Lightning conference that I really want to make sure everybody knows about. The Lightning Conference, the world's first Lightning Conference. Elizabeth Stark, of course, is going to be a part of that. Lightning Labs is over there throwing this thing together. It is the lightningconference.com, and that is being held in Berlin, October 19th and 20th. Highly recommend everybody go over there and check that out because, I mean, all the OGs like to brag about the first Bitcoin conference that they went to. You got Trace, you got Max, right? Trace Mayer, Max Kaiser, some of these people, some of these really early OG people bragging about all the time. I was at that first Bitcoin conference. But guess what, guys? You can have the chance to be at the world's first Lightning conference this fall in Berlin, so this October. So check that out. I would go if I could. I really, unfortunate that I have some other things I have to do. But man, October 19th and 20th, if they would have only announced that just a week later, I could have gone. But I recommend everybody going. It really is going to be awesome, guys. And I think there's going to be a whole lot of buzz around Lightning during that time. That's going to generate massive amounts of buzz because, guys, there are thousands, if not tens of thousands, if not hundreds of thousands of people out in the world right now working on Lightning projects because they understand that this really is Bitcoin's best shot at scaling transactions at layers above layer 1. So definitely check that out. And I think that's all for me.
But you forgot one thing, CryptoCast Network.
Oh, of course, you can find out everything about me and everything I do over on my Twitter account at @the1vortex, all spelled out at @the1vortex. And of course, CryptoCast Network is the YouTube channel that I rep. That is my channel where we have Bitcoin news and information out there all the time. So lots of content there. The biggest show we do is the Bitcoin News Show. That's every other Sunday. Our next episode will be airing the next Sunday after this, the Sunday after this, which I think is the 22nd. So look forward to that.
Dude, you got to get Jeet on that show, man.
You
got to get Jeet on that show. All right, Jeet, you got the final word here. What was left out? What do you have to say? Oh, you're muted. You're muted.
The most interesting thing I saw on Twitter this past week was, I think, this analysis that somebody had done on Vitalik's coins, and they kind of looked at, well, how much has he cashed out and what's he done? And it's kind of interesting to see that Vitalik, who's like one of the smartest people in this space, underestimated how valuable Ethereum would be and sold a significant portion of his holdings, which were already pre-mined, too early. So I think that's an important lesson for all of us because it's kind of like in addition to crypto, I'm also just interested in investing more generally. And there's an interesting podcast, Invest Like the Best. If you guys are interested in investing, you should check it out. And one of the guys there is like an OG investor in Berkshire Hathaway. And he was explaining his biggest regrets. And one of them was a store that he bought that he felt like it had like the value investing characteristics, bought it back in like 2000 and it went up 20% and he sold it. And then since he sold it in 2000, it's been a 20 bagger. So it's gone up 20 times. And every time he was thinking he should get back in, but then he thought like, look, it's too rich a price. Like I already sold it for such a lower price. I should wait for the price to come down, and it never came down. So you can imagine the guy who was sitting there when Bitcoin went from 900 to 1100 or 1000, and it broke that barrier, thinking, I'll get it when it's below 1000 again, and it just hasn't gone back down. So not to induce FOMO, like obviously, size your positions and be responsible about not like throwing all your money into it. But I think it's important to think about the long term, because the biggest gains are not going to come next week with a 20% green candle. They're going to come 10 or 20 years down the line when Bitcoin scales from being still kind of an early adopter thing into being completely mainstream. So, hearing that podcast and then seeing that Twitter thread just kind of highlighted that for me. And I hope you guys will, follow that too.
That Vitalik analysis, that thread, can you send that to me? Because I'll link to it below. Yes.
It was a big deal. Like, I think it was all like on the CoinDesk and stuff when he sold. I think he sold like 25%. It was like, what was it, like $4 or $5? It was something really small, really ridiculous.
It was pretty bad. Yeah, I don't remember the numbers, but I just remember looking at it and thinking, like, dude, how could you? Like,
I believe it was single digits.
It was just atrocious. And the funny thing was too, that's part of the problem is with all these altcoins, like Ethereum is a particularly egregious example because it's so successful. And, you think like there's so many people building on it. They should have done the right thing in the beginning and it would have made it more legit. But there's other examples, like even Monero, those early guys in Monero is legitimate because they did all the right things. But when they were first launching that coin, they were the early miners and they didn't have the foresight and the vision to see that what it could become. So they all sold significant portions of their like holdings very early. So they sold for cash because they didn't see that Monero was going to go to, I think, like $90 or whatever it's at. They sold in a sense, right? So a lot of the people who are OGs, that may not be the person that you want to like look to for investment advice.
Ricardo, I remember Ricardo popping the champagne on Twitter at like $4 a coin.
I remember when it went from like $2 to $4. It was a big deal. It was 2016. I remember that stuff. Memories, OGs. Okay, dudes. Thank you very much, Jeet and Vortex. Great show. Remember, we do this show every Friday, This Week in Bitcoin. And then I do a regular show, the One Bitcoin Show every day. Saturday is Beyond Bitcoin Show. So tune in every day, new show every single day, disruptmeister.com. You can see all the old ones. I'm Adam Meister, the Bitcoin Meister, Disrupt Meister. Remember, subscribe to the channel, like this video, share this video, check out the links below. Pound that like button, bang that bell button, click on those squares. Shabbat Shalom. We will see you next week and tomorrow. Bye-bye, everyone. See ya.